Welcome back, everybody, to another episode of the People's Real Estate Podcast. In this episode, we brought back our good friend Alvin Flores, the lender.
Thank you.
So
Appreciate
welcome,
being
Alvin.
back.
How's everybody doing? I'm joined by my other two hosts, Edwin and
Hello.
Renee. How we feeling, fellas?
Feeling great, man.
Feeling great.
Running on
Good,
Duncan
man.
today.
We're running on Duncan today. Yes, we are. I'm excited about this episode. We decided to bring back Alvin to talk about, give us an update on what rates are doing and what we could expect. And we have other topics like we're going to talk about, what buyers can do to lower the rate if they're thinking about buying. We're going to talk about 2-1 buy down. And we're also going to talk about something new that came on the market where you can potentially use rental income from a ADU and how you can use that to be able to get into a property. So stick around, and I hope you enjoyed today's episode. So, fellas, Alvin,
Yes, sir.
let's start with rates, right? What are rates doing right now? First of all, how are you? How you been?
Good, man. I've been good. It's been a crazy 2023. I'll tell you that. A lot of changes have happened since the last time I was on the show. So,
yes.
as we're ending the year 2023, some positives have come to light through the the changes in the economy, things like that, and then specifically on mortgage rate side. There's some good information that I'd like to share. So yesterday, which was November 14th, 15th? 14th?
Yeah.
Whatever the
14th,
date.
yeah,
14th. So
We're so busy we don't even know
I
what day it is.
We just know that the end of the year is approaching.
I know
Yes.
it's Tuesday.
Yeah.
It's Tuesday. No. What? Today's Wednesday.
Today's Wednesday.
I know today's Wednesday.
Yesterday was whatever, man. So, anyways, the good thing
That's
is
what you guys.
we got
you guys are
some
hilarious.
good news on the mortgage side, right? So, inflation is projecting lower, which is a good thing. So, which in turn means that Feds may not increase rates come December. So, markets reacted in a positive way, which means that rates have started to kind of dip a little bit. It's not potentially going to be a humongous dip where we're going to see the 2-3% rates again, but it's the trend in the right direction, which means that potentially rates will once again drop into the low 7s, into the 6s, which is ideal to kind of get a lot of people motivated back into the market. So that's where we're trending, at least now. Potentially going into the next year, into the spring market, rates could potentially even be a little lower than that, which is hopefully the case, and that's where we want to be. And a lot of people usually start to buy around that time anyways.
Yeah, we all know that the spring market, correct me if I'm wrong, Renee, but the spring market can get a little bit hectic, right?
Strong market, man. Spring market is it's actually sometimes it's stronger than the summer market. You know what I mean?
Yeah.
Spring market is strong. Man.
Yeah, a lot of people get their tax money back in that time of the year, and people get motivated.
Yeah, so you heard it here. If you're thinking about, if you've been on the fence about whether you should start getting pre-qualified or talking to a lender or a professional in the real estate business to see how you can get a house or what you have to do, I think now is the time. There's still a lot of people that are waiting on the sidelines for home prices to come down and rates to come down, and most likely that's both of those things aren't going to happen at the same time.
So I actually want to make a point about this, and maybe you guys could chime in on this too.
Right.
So this right now I would say would be the ideal time to buy, simply because there are those people right now waiting, on the sidelines. And the moment people will become aware of rates dipping into the 6s, because that's probably what's going to happen. As soon as they dip into the low 6s and 5s, you're going to see a flood of those buyers coming back into the market and competing for these houses. So what does that mean to the potential buyer? That you're going to have to start overbidding again for these homes. So right now, because we're trending in a good direction of where the rates are going down, get into the market, buy these houses, because if the rates are going to continue to go down, that means that later in the future, within a year's time, you can refinance. You can refinance for the price of the home that you got it for today, not that price that may be a little bit more within the next year or a couple months.
It's gonna be more. I mean, we saw it during like the COVID years.
Exactly.
Yeah.
And
You know what I mean?
that's what I'm anticipating is going to happen again.
I mean, brother. I mean, you're talking about average homes that needed work. You know, that weren't priced correctly. They were still getting 15, 20 offers.
Yep.
You know what I mean? And I'm talking about the average house. I'm not. This is not a nice house.
Yeah.
You know.
Nothing updated. This
Yeah,
is,
yeah.
Yeah,
I'm talking
you
about,
were going-
needs a little work.
We were going into every contract knowing that we're most likely going to have to offer more than
You have
asking.
to. I mean, and
to even have a shot.
yeah, yeah.
Yeah. So, and then these are just like people, and also people have to understand that there's not a lot of houses on the market. So it's also still if you're looking for a good time to sell, now is a good time to sell because you're gonna get a good deal for your house.
It's just interesting. I'm just looking quick from Maryland Association of Realtors, right?
Yeah.
So units sold in the month of October, right? Last month. In comparison, right? So Montgomery County down 24%, right? 844 units closed last year. Only 636 closed this year, right? In October, right? 24%. PG County down 12.3%, right? And then you have some counties like Washington County, like Hagerstown. It's actually up 12%. So overall, Maryland, though, down 14.5%. So 6,006 units closed last October in 2022. And in 2023, October, 5,134. So down 14.5%. Listen to this, though. So knowing that we're closing less units, that would mean less activity, things like that, right? What do you think is happening to home prices? Overall in Maryland, what do you think happened?
Probably going down.
Going down? What do you think?
I think they're going up.
What do you think?
I think they're going up.
Yeah. Up 4.7% over
that's-
last year.
Yep.
Less homes, more
So less-
buyers on the.
Yeah, so it's like less inventory, less closings, right?
Yeah.
And I wouldn't say less inventory actually, but less closings. The price is actually either maintaining or going up. Maryland overall, like the country overall, I think prices are down, right?
Yeah, and that's the thing. Maryland's it's its own market,
Yeah,
right?
the DMV
you can't-
kinda,
you
right?
can't really compare that to the rest of the national averages.
It's tough. You know?
I feel like it's going to be a completely different market here compared to different states.
Yeah. That's the thing about real estate. It can be very hyper local. So it's gonna be different markets are gonna vary. But we always talk about this on the podcast, right? People should. It's always a right time to buy. It depends on your situation, right?
Absolutely.
If you're in the right position to financially and you're in everything else is aligned. You should at least get informed to see if how you can qualify or if you're ready to, if you got a good job, you got a good set of reserve of cash for a home purchase. Why not look into it? There's so many programs, and then like I said, we're gonna get into a 2-1 buy down, which people can also leverage.
Yeah.
So
One thing I find kind of interesting is people people know credit is important and they pay their bills on time and stuff like that. But in general, I ask buyers, hey, do you know your credit score? I think it's this, you know what I mean? So it's like credit score is something huge, where you control it, right?
Yeah.
And there's so many things out there that you could do. There's apps and all that. So I think being on top of your credit, along with having a little bit of money and having a stable maybe job,
Yep.
Really focus on the credit part of it.
Yeah.
I mean, at the end of the day, you gotta look out for yourself. At the end of the day,
Yeah.
and setting yourself up with a set of real estate, a little property, it goes a long way.
Yeah.
No, it's funny. I heard a statistic, or I don't know if it was a statistic, but it was some report that somebody put up on a video, on a reel, and it was apparently about this. Over the summer, a lot of people were interested in still buying homes, but they were so, I guess, demoralized by how high the rates had gone that they went instead to basically try to rent. These are people, I would say, like the younger generation looking to purchase their first-time home buyers, and they were maybe still living with their parents or just maybe had an off situation. But essentially, they go into the rental market and they find that it's also expensive.
Yeah.
Yeah.
So
And it's not yours.
Shocker.
Yeah.
And it gets more expensive next year.
Yeah. And so people are under this impression that, it's, you know what, it's probably a lot better to go ahead and rent.
Yeah.
But renters are asking for a security deposit and
Yeah.
the first
Yeah,
month.
it's not easy.
So now you're still having to make basically what you're making for a down payment for a house.
Yeah.
So essentially, you're coming up to rent somebody else's house. You still have to have a good chunk of money saved.
Yeah, good credit.
And good credit.
Yeah.
And on top of that, you're almost paying around the same amount for what would be a house.
Yeah.
So why not look at what you could qualify for a house? 'Cause
Exactly.
There's assistance out there. There's you still have to come up with some kind of money. But at least there's the better opportunity for you to invest in yourself.
Exactly.
And every Instagram comment will tell you, "Oh, you're just a lender trying to make a deal."
Hey man, go out there and check for yourself.
It's
Go out there and check for yourself.
They know. They know.
You can't. If you don't want to take my
know.
word for it, go out there and check for
Yeah.
yourself.
I did see, and I don't know if this is true or not. I did see a reel also. It says if in 1982 you would have waited for interest rates to drop, you would have been waiting till like 1993 or something like that.
That's crazy.
Yeah, bro. You'll be waiting a while. Meaning, if that's true, meaning, nobody can predict this thing.
Yeah.
You know what I mean? So you got to do what's right for you, not what they're telling you on television or what your cousin is telling you that he bought 5 years ago.
Yeah, exactly.
You know what I'm saying? It's an individual thing, your purchase. You know what I mean? It has to make sense.
I heard on another podcast somebody a smart real estate agent said you're paying a mortgage either way.
Yeah.
Either you make you make up the decision to pay your mortgage, or you're gonna just be paying somebody else's mortgage.
Facts.
Yes.
That's just the truth of it. That's just what it comes down to.
Yeah.
It's just what do you want to do?
Yeah.
Do you want to get all the benefits of paying your own mortgage? The tax deductions, everything that comes with it, or do you want to just do it for somebody else?
And that's interesting that you say that, right? Edwin and I were in a meeting with a client where it's about $200-$300 separating them from what they want, and how can I say this? What they actually want. Let's say from where they want to be to what they want. They're about $300-$400 maybe apart. And we're sitting there with them and we're like, hey, like we do with most clients, we say, hey, look, because you haven't owned before, right? They were first-time home buyers, potential first-time home buyers. We're like, you're not taking in the fact of like the tax benefit, like Carlos just said.
Right.
Like, and then, Edwin, put it up and it was something like, I think $300, $314 a month or something
Around
like
there,
that.
yeah.
And they were like, whoa, like, we didn't know that. We're like, yeah, that's what we're here for. But in home ownership, there are things that, unless you are a homeowner or you sit down with a professional, you're not going to know. That's just how it is. There are benefits, other than just this is mine and that's not mine. There are other benefits year on year, with home ownership. You know what I mean?
Yeah.
And that's actually, I don't think that's ever talked about. One of the benefits is the tax exemptions. How you don't see the money right now, but you're not paying, let's say $2,500. You're really paying $2,200 when the taxes come back at the end of the year.
Yeah.
Yep.
And then if you want to go even further, right? Alvin will tell you, like when you get that payment, that's still mortgage insurance usually in there and taxes in there. That's not the true cost of owning the home, because people lump up all those things together.
Yeah.
See what I'm saying? But honestly, if you just look at what it's really costing you just to own the home on a monthly basis, it's going to be cheaper than rent usually,
Yeah.
Once you take that stuff out, like, and that's how it should be, but it's not presented like that to the public,
Exactly.
Yeah. There's so many options. Like I guess this would be a good segue, right? For somebody who's people's biggest issue or objection is like, interest rates are too high, right? So that's a good segue to get into what people can do about if you have the option to, or if you want to explore the option of a 2-1 buy down. So Alvin, please explain to the people what a 2-1 buy down is and how people can use it.
Yeah. So this these programs have come about because of how high the interest rates have gotten, right? So a lot of different lenders, including our lender, is doing these 2-1 buy down programs where essentially the seller is basically paying for your interest rate. So they're essentially paying your first 2 years of interest. So let's say your interest right now, if you qualify, is a 7.5%. That seller for the first year will pay for your interest to be a 5.5%. Year 2 will be a 6.5%. and then year 3 will go back to whatever your qualified interest was when you purchased, right? Which is in this example would be the 7.5. But it's essentially your seller's paying for that. Your seller's going to pay for your interest for the first 2 years, which is super beneficial because at least, especially because rates are trending in the direction as they're going lower, you could take advantage of these programs, get a more I would say a cheaper monthly payment. And then if rates get to a point where it's super beneficial for you to refinance, you refinance your loan and then lock into a fixed rate where you are going to pay a lot less for the 30-year time. Now, one thing, and I just thought of this as I said it, these 2-1 buy downs are fixed rates. So a lot of people think,
yeah, I was going to touch on that too.
They think that it's a variable rate and this is going to change. And no, it's literally set up to a point where the first 2 years are only going to fluctuate within a percent.
Basically, right? You agree to today's market rate, and then you get a discount on that rate for 2 years.
For the first
that
2
the
years.
seller, that as the lender has the program, and us realtors go and negotiate that for you. We go get that from the seller to pay that for.
Correct.
But guys, why would a seller want to pay for a lower interest rate for me as a home buyer?
So motivation is usually one of the things to motivate, get them to sell their house. Some surprisingly, even with the limited inventory that we have, there are places that aren't getting as much attention.
Yeah.
So part of some of the techniques that you can, a seller even understands, is that I need to sell my house.
Yeah.
So what are the things that I know that can help sell it is offering 2-1 buy down options by using the seller credit. So they'll say, hey, I'm willing to give you a 3% seller credit.
Yep.
So that way you can buy the house and you go in with a lower monthly option.
Yep. And to add to that, I can testify to that because I'm on the Southern Maryland side. So I'm doing showings out there, and I'm seeing agents saying seller highly motivated, seller willing to do closing cost help. So it's true. Like even there's some areas, it's not going to be every area, but there's some areas where sellers are really motivated. They're not getting enough attention, so they're like, hey, let's throw out this help to kind of get more eyes on the.
And it's understandable, like you guys were saying, right? And it's understandable because if someone says, look, if I'm going to pay this price and this rate, right, or this monthly, then I need it to be at this standard, right? So obviously homes right now that need a little work or, things like that maybe some updates, they're going to sit a little longer because those aren't the desirable homes right now.
Right.
You know what I mean? So that's just what's happening right now in the market.
And these programs, honestly, may not even last that long. Simply because if the rates are trending in the lower direction,
it's not needed.
More buyers are going to end up flooding the market where 2-1 buy downs are going to be.
That's true. That's true, Alvin.
It's just essentially going to go away because people are going to start bidding more and more. So a seller's not going to be motivated to say, hey, I'll give you seller credit.
The 2-1 buy down was just in response to what was happening.
Exactly.
You know what I mean?
Exactly.
And in general, look, I understand, and I understand people when they say, "Oh, the rates are high," but then I'm like, okay, compared to what though? Are you talking about the historic low rates that just happened? Yes, compared to that, they're high, but. Before we got into those low rates, we were hovering like in the 5.5, 6s.
Right.
Yeah.
You know what I mean? 6, let's say, so we're at 7.5.
Yeah.
We're only like a 1.5, maybe 2 points from like where normally rates are.
Right.
You know what I mean? But it's because people have the perception that they're comparing it to, their friend that bought or their family member that bought it or whatever it is. And they just bought within the last 5 years. And within the last 5 years, you probably got a historic rate.
Yeah, I mean,
you know what I mean?
The pandemic time was such a unique time that we're probably never going to see again.
Yeah.
Never.
At least in our lifetime, I don't think we're going to see.
I mean, nobody can say never, right? But we don't think so.
I don't.
It's not
think
likely.
So. Yeah,
Not
it was
likely.
it was such a unique time for people to go into the market. And whoever did get a home and purchase, good for you. You're more than likely going to hold on to that home and that rate. But it's for the people that didn't take advantage of it and just are looking to do now, there's still programs.
Yeah, it doesn't mean you can't win now. It's just they got a head start.
Yeah.
And
you know what I mean?
And I was in this conversation with somebody. We were talking about buying a house, and I remember saying, you know what? I believe there was one good time where you should buy a house. Where I was like, you should buy a house. There's definitely one good time. I was like, it was during the pandemic.
Yeah.
I was like, you want to know the second best time? Is now.
Of course.
Bars.
Facts.
Bars.
The second
Facts.
best time whenever you get the opportunity to do so.
That's what I mean. You know, that's what we tell them, right? The clients, but they agreed. Like, you
Yeah.
know what I mean? That was a great time to buy.
We are not just real estate agents trying to make a quick buck. We're telling you guys this because that's how you build generational wealth is through real estate. Yes, and it's one of the safest investment vehicles, you know. And it's like America promotes homeownership.
Yeah.
And there's all these programs. That's why
good for the economy.
That's why we started this podcast to educate people, to give them a inside look of why they should buy a house
And how.
Exactly, and all the help that's out there, you know.
Yeah.
So tell me right now, what is the government doing for potential homeowners right now?
They've always been giving people programs. They always create
Well, I
programs.
heard, Alvin, I don't know if you heard, but I heard they're putting together a stimulus like back in the Obama days.
Yeah, I heard
Where they would
about
actually
that
they would
too.
actually give you a federal government would give you a credit when you bought a house.
So
I don't remember that.
I've heard of it. I know that there's some stipulations to it, but I know that they are putting together.
Yeah, they're putting together. I heard 16 like billion or something.
Yes,
Yeah, I heard
towards
too.
it.
Yeah,
Yep.
so we'll see where that goes. You know, so that's the government, like you were asking, right? And we got what we were talking about earlier. We have Federal Housing Administration and HUD kind of loosening up, or maybe not loosening up, but getting creative when it comes to the guidelines or the underwriting process for ADUs, right?
Yeah.
And what is an ADU, right?
It's so an ADU is an accessory dwelling unit.
There you go.
So Alvin, what are the details on this thing that you know of?
Yeah, so it's I would say that it's an FHA product, right? So it's an FHA guideline that just got introduced recently, and it's specifically for these ADUs, accessory dwelling units. And I would say the best way to define an accessory dwelling unit or an ADU is to kind of think of it like as a separate portion to your house or an additional portion to your house. It could be categorized as a detached unit to your house. It could be attached like a basement, or maybe you converted your garage to its own unit, something like that. That I would say, just to kind of give you an idea. But essentially, this ADU has to have its own entrance and exit. It has to have its own kitchen, bathroom, and essentially just any major component that would categorize it as its own unit, right? So that's what it would be considered an ADU. Now, the benefit to having this and why we are touching on this subject is because people who are looking to purchase and the house that they're looking to purchase that has an ADU, you could use that as potential rent income. So that's a major benefit when it comes to trying to qualify for a little bit more for maybe a house. Maybe right now you qualify for like $375, and the house you're looking at is at $400,000. That $400,000 house could be attainable with an ADU because now you're factoring in potential rent income that you can get from it. So that kind of gives an idea of how FHA's kind of help people buy homes.
That's a huge difference, and I know for some people who can kind of see where the opportunity is in that and are able to take advantage of that, it's going to be a great opportunity.
Right. So let's break it down, right, host? Let's break it down, right? I'm a buyer that is okay with. I was going to say, and in the city they have a lot where they turn these the row homes, the townhomes, into 2 units by doing another unit upstairs.
Yeah,
they keep 1 unit downstairs and another. Okay, but so that's another example, right?
Yeah.
If you say there is no basement, right?
Yeah.
Or whatever. But so let's say I'm a buyer and I'm okay. We've talked about it. I understand that perhaps how can I put it? What I want is a little out of my budget. So that gets me to understand that maybe I have to rent the property to stay in the area I want. Maybe I have to rent part of this property, right?
Yeah.
So now what Alvin is telling me is if I go maybe bump up my budget a little bit, right, where the numbers may, right, and I find a property that has, like you guys said, like something maybe like an attached addition or a basement, right? So now what you're telling me is based on what that unit downstairs, or let's say it's a basement, based on what that could produce. Let's say that rents out for $2,000 a month, right? And let's say that I only need 1,000, half of it, right? Now we can take that 1,000, right, and apply it to my qualification and boost me up.
Yeah, so I mean, there is a calculation of how.
Yeah,
they do it, right?
I'm just going, big
yeah,
round numbers.
right?
But,
The
math has to math, right?
Exactly,
Yeah.
exactly. So they'll take 75% of
Okay.
what the potential rent is. So
Okay.
they'll part of the appraisal process when you're in the purchase, you can there will be an appraisal just to see what the market rent would be for a unit like that, right?
Yeah.
So if it's a basement, for example, and you could rent it for $1,000, 75% of that is what's going to take, and so that's $750.
Yeah.
So that's your potential rent that you can use and add that to your qualification.
Yeah. So now basically that becomes income to me as a buyer.
Exactly.
Potential income.
Potential income as a
And you guys based the loan on that.
Correct.
So that boosts me up and I can get that $400,000 house.
Exactly.
And have the unit.
Exactly right, man.
Yeah.
So what do you do when you find a property and the ADU is not yet built? It's not yet remodeled. It's not ready.
So let's say it has the basement, but it's just an open basement. There's no rooms.
Yeah, empty basement. Something is not finished, right? So there's options that FHA also created where you can utilize a 203K to create your ADU, which is super helpful because if you find a property that could fit those qualifications, having the unfinished basement and you can convert it to an ADU, then yes, that you could factor that in, add use the loan and the financing to finish the basement, convert it to an ADU, and still use the potential rental income.
That's huge.
So
That's huge.
if I'm someone listening to this right now and I want to start investing for like the low,
Yeah.
bro, that's it right
ADU.
there.
And you can still go and get a 3.5% down payment.
That's what I'm saying. The
without
low.
having to put a major investment.
No, 20%.
Yeah.
And you walk out with 2 units.
Yeah.
And the bank paid for it.
Yeah.
Yep.
And you're
Like
cash
for,
flowing.
for a first time homeowner, you want to like get ahead and like with the first purchase that you make, this is a phenomenal way to do it. If you know.
let's say you're not a buyer, like you're not a family, or you're not necessarily looking just something to fit your lifestyle. Like you're actually looking to invest, right? But everywhere you go, 20%, because the property doesn't conform, right? It's not, it's not in, like you find a good property, you're like, oh, that's a good price. But then you go and maybe it doesn't have electricity or there's a problem with the roof. So the lender's not necessarily going to give you the money for that. And if they do, they want 25%, 20%. And then you're like, oh man, like, that's out of my budget. So this is a good way to find a property that has either it has it already, right? It's set up as 2 units already.
Yeah.
Or you can either go further, and if there's the potential to build out the second unit, you could do that too.
Yeah, exactly.
You know what I mean?
And this is not hard. Don't overcomplicate it, guys. It's just like if the house has a basement, if the house has a garage, it can be a detached or attached garage, and a separate exit. That's it.
Yep.
It
has to have its own.
and then like Alvin said, if it's not built out, then you can leverage a 203K to build it, and then do what you got to do to it.
Exactly.
It's amazing.
So what I'm hearing throughout this whole podcast is that there is tons of strategies backed by the government, backed by the lenders who created strategies through the pandemic, and now in this time to support homeowners to get into houses and potentially make rental income at the same time.
Absolutely, yeah. There's plenty ways in strategies, as you mentioned, to become a homeowner, and where you're not feeling like your only option is to rent.
Yeah.
Absolutely, there's definitely a lot of ways, and as you guys have said before, you have to talk to somebody, get informed, talk to a real estate professional, and at least get the information. I'd say the first step, like we always say, is just getting informed, talking to somebody that is in the business actively, not just in the business, but is like knows the business, knows because not every real estate agent is the same. They're not gonna all know the same information. It just depends how hard they work. And don't trust your aunt, your uncle, your whoever told you don't buy a house because interest rates are too high, and wait till interest rates drop to 3% again. No, you're gonna be waiting for another 10, 20 years.
Who knows? I mean, they could be right, but it's still better to grab the property.
Yeah,
and stay out those Instagram real estate account comments because there's so many opinions on that. So many
Yeah.
opinions. In any video you see, it's always, oh, this guy's just trying to sell something.
It's unfortunate. There's always going to be that one negative comment or more than one. But yeah, it's.
I mean, we are trying to sell. That's the whole point, though. I sell houses. Bro. That's what I do. Like, you know, but the whole thing is, how do you do it? I mean, go look at the Google reviews. You know what I mean? Like, it's how do you do it? How do you treat people? You know what I'm saying?
Well, the comment section isn't for the lighthearted regardless. It's not. If you're sensitive and you don't like getting your feelings hurt, stay out the comment section.
Oh, I like going through the comments.
I do too.
Yeah. I like seeing what they say.
When I'm scrolling, I look at the top comments are always so.
That's
hilarious.
why I love America. I love capitalism, bro. Because free market, the market's the market. Like if you don't bring value to the market, you ain't eating. Like that's just how it is, man. So I mean, we're in sales, right? That's what we do. But like I said, there is the combination that we want to treat people right and do right by them and give them the right information. You know?
Yeah.
I mean, we're also realtors, so we had to abide by a code of ethics.
Yeah. And then we're in a business where your reputation is everything.
Yeah.
It's like we can't afford to not do things the right way. We can't afford not to leave a good experience and do right by people because that's what our business thrives on. If you don't recommend us to somebody else, then we aren't doing our job correctly.
Basically.
That's just what it is. So, fellas, this episode has been amazing.
Yeah,
I feel like we provided a lot of information, and I do want to say if you do enjoy this type of episodes where we bring on a lender, especially Alvin, we love having Alvin on. Please drop a like, a comment, leave us a review or something. Let us know questions that you may have, and if you want any more information on any of the topics of the things we just talked about, please reach out to us. All our information is going to be in the description.
Yeah, thanks to Alvin for stopping by, right?
Thank you, Alvin.
And that's Alvin with Embrace Home Loans. And Alvin, plug your product that you were telling us right now that's exclusive to Embrace.
Free plug.
Yeah, so we have, I would say it's exclusive to us with Embrace Home Loans. We do the 2-1 buy-down programs. We also have a lender-paid buy-down program, which is a year's worth of a rate being paid by the lender, so you don't have to have the seller pay it, which is nice because again, the features of a buy down means that you get to lower the interest in your monthly payment for that first year. So the lender pays that, and then of course the FHA ADUs and 203Ks. Those are things that we all work on, and of course down payment assistance programs for the first time buyers. Those are huge and crucial programs that we work with a lot to help these first time buyers.
Maryland Mortgage is doing really good by people right now, right?
Mortgage, correct.
Yeah, exactly. Maryland Mortgage program. And just to clarify, so Alvin, if I go out there and let's say we sat down, we talked about and this is with Embrace, right? But we talked about a 2-1 buy down, and we go out there and there's a seller that that wants to give me a good credit, right? And I say, can I do this? Can I say, look, I'm not gonna use the seller's money for the buy down for 2 years. I'd rather take the option for 1 year where Embrace will do it, right? So Embrace will give me a lower rate for 1 year. They'll pay for it. And then I take what the seller gave me to lower all my closing costs so I can keep my money in my pocket.
Absolutely.
So I can do that too, right?
Because at the end of the day, the seller is providing the credit. It's really on you how you want
to use it, how you want to apply it, right?
Exactly.
So I could take the best of both worlds.
You could take the best of both, So you could do the lender paid buy down and then apply the credit from the seller towards your closing cost.
There you go.
So
that's amazing.
My God, one more strategy for you guys
before I had to go, right? I just gave you one more.
Exclusive though. You got to hit up Alvin for that
There you
one.
go.
So don't forget, Alvin gets you the money, we get you the house.